Hey traders, this is Ron at Market Tamer. Happy Tuesday. Hope you had a great day. As always, everything in this presentation is for educational purposes only. We'll kick off here with SPY, essentially flat on the day. It did come off its highs, but we're still sitting up there at new all-time high area. We take a look at the Russell 2000 just for something different. It was up nicely today, about a quarter, third percent. But if I zoom back out, what do we see? Range bound, up there to 160, down here to 145. I got a question on the Fed and cutting rates. Is it good or bad? We can have our opinions as individual traders, but it's really what does the big money want to do? And if they sell it, if they buy it, it doesn't mean the market's going to continue on for months in either direction. It could be a knee-jerk reaction. It could be a 1 to 2, 3 week, a quarterly reaction. I don't know. And neither does anybody else. But I would say this, how would I prepare for it? If I was trading the Russell, just as an example, below 145 is bearish, above 160 is bullish. We're at 156 and change. Whether the Russell ends up popping a percent or two or something doesn't really mean much. We got to break out and start a new trend. And that to me is a better reward to risk ratio. If we're up a little or down a little, you're still caught in this trading range. So then if I bring in something like the Qs, let's just switch indexes. Well, the Qs are sitting up there near all-time highs, just like the S&P, right? Well, as long as we stay above moving averages, we're bullish. If let's say the market has a negative reaction for that one day, that afternoon, or whatever, maybe it's weeks, we would have to get below the 20-day in red, then the 50-day in orange. We start getting more bearish then, and then we come back down here to swing lows. For me, a big one would be that 180 area. That's going to be a problem because below 180, then we come down to 170, then we come down here. So for me, I'm not looking for a day trading opportunity on the Fed. You often probably heard as well that sometimes the day after the Fed announcement, there's a reversal of whatever happens the day before. There's just so much guessing. There's a lot of day traders and they're looking to catch, quick trends, or they're looking for a couple ticks or something. For me as a longer term trader, I just go with what are the buys and the sells showing us? How are they taking their positions home on an end of day basis? So that matches the way I want to trade. If I was a day trader, I'd probably have 5-minute, 2-minute, 15-minute charts up. But that's not what I'm going to be doing. Just, literally, if I was gone all day after the Fed announces, and then I come home, I check the computer, again, my decisions are going to be based off end of day. And I think that's a lot less stressful way to trade, especially for those of us that want to do other things during the day, whether it's work or we just don't want to watch the market all day. So we'll still do the daily analysis, once the Fed makes their decision, etc., and we'll just react to how the big money is reacting to that event. Make sense? All right, good question. Now, how about Beyond Meat? This thing is dropping like a rock. So here's Beyond Meat, down 21%. I just want to highlight something for you guys. You were asking me about it over the summer, June and July, and the only thing I can really say is whether it was here, or all the way up top, the valuations were insane. But one thing we know, Wall Street loves the unknown in terms of growth. They love the idea that, oh my goodness, it could just keep going, right? So we finally get up there into the 220s. We then drop. And the key was when we broke below the 50-day. The 50-day finally came out here in July when we had enough data for it. We broke the 50-day. We test a previous little swing low. We bounce. What can't we get above? Interesting. The 50-day. Then we come down. We couldn't even get up towards it again. And then once we started building some horizontal support here at 140, once that was broken, we started going from 138 down to the 120s, down to 100, and then here we sit today down at under $82, $81.99 at the end of the day. The downside target, well, go to the IPO price over here. That would be the next technical target. So just keep an eye on this on your stock when there's trend changes. Really bullish move, we started losing a major moving average, and then it became resistance. It was showing that a change in sentiment on those traders. They weren't looking to just keep pushing it to new highs. In fact, they were selling. There was no buying coming in to break it. So it was a sell point instead of a buy point. Make sense? Now, 3 other stocks to look at: NOV, RIG, and RRC. Here is National Oilwell Varco. If I zoom out, this stock just, September a year ago was up 45. It's still 50% off essentially. What we got going on here is a little bit of an interesting pattern. Potential of a head down here, left shoulder, right shoulder, and a visible, it's not a perfect neckline, but $25, nice big fat round number, ties in with a spike with a swing low. over here, which then led to a reversal. Above 25, 30 would be the upside target, and then maybe all the way up here. Big volume today too. So zooming in, we closed near the highs of the day. I want to keep an eye on this. I'm going to call it, I mean, we could even zoom in and say 24, but I think 25 is a bigger number. We get above that 25 on a closing basis, that would be a bullish breakout. You could argue today's a bullish breakout. I'm just saying a little more confirmation is what I would prefer than just a one-hit wonder, because if you go back to right here, what day was that? The end of July, beginning of August, we had that one spike, follow through reversal, went right back down to new lows. I want a little more confirmation, which is one more reason why I want to keep an eye on 25 bucks. All right, here is RIG, Transocean. Nice pop today. If I zoom out, you can see the volume here, over here on the right. It's in aggregate, it's a lot more volume than you've seen any other time during potential rallies or bottoms. Yes, there was a bottom here. It went from 7 to almost 10, 30, 40% rally, but there was no consistently high volume. Now we've seen consistently high volume since pretty much August through now. It's a bigger swath of volume. We did not put in a lower low earlier this month, albeit barely, but hey, it didn't happen. Now we're getting a pop up today, good volume. At this point, you can see this is going to be a little overhead supply, and that's exactly what stopped the stock in mid-September. I would say the target right now is about $1 to $1.50 higher, 6.5. However, we get above that 6.5 area, then we have a gap fill to low sevens, another little overhead supply area right here, and then back up into here. So RIG here is looking interesting. If you are bearish on RIG, you've been put on notice today. Today was a big move. And here's RRC. This is Range Resources. Here was the low in late August. Pretty much an equal low. It was maybe ever so slightly lower, but I would say it was even. And that was right around, what, 340-ish? And now we're seeing some nice up moves. And if I zoom in really close, the volume bars are starting to rise. Yes, there was a red bar 4 days ago, but look where the price finished, way off those lows. So even something here like a cheap stock, we're now above moving averages, target up here, and then the big one would be all up there towards 10-ish if we can get there. So turnaround stories in RIG and RRC, not saying they're going to get there, but if I was bearish or short these stocks, I'd be very concerned right now. And then we got, not B, but we got Facebook. They're due out with earnings. Could go either way here. I have no idea. Some people are bullish, some people are bearish. Just wait and see. If you want to paper trade straddles or strangles and see what happens, Facebook sometimes does move big with earnings and sometimes it necessarily doesn't. But you could practice stocks around 189, do a 190 straddle in a paper trading virtual trading account going out to maybe December. There's probably plenty of time. November might be a little too short. And then Apple is also due out tomorrow after the bell. So that'll be big news. Apple's just been in a pretty much a straight line since August. It had that little September pause around its usual product announcement, but then it just got shot out of a cannon. Beginning of this month, October, went from 220 and was up. What was the high yesterday? Yesterday's high was, I was going to say it was almost 250, 249 yesterday. Today, down 2%. Did not complete bearish engulfing, but even if it did, we would need to break at least maybe the 20-day to get a little more concerned. So that is it, guys. Big news tomorrow with Facebook, Apple, and we'll keep an eye on how the market trades with the Fed. Wish you guys all the best, and I'll see you in the next video. Take care.